Hello, everyone. I'm Matt Clark, research analyst for Money Markets, here with your weekly Bull and the Bear podcast. Now, if you haven't done it already, I do want to make sure that you do subscribe to our YouTube channel. You'll find a lot of great new features that we have on the channel. We've got Chief Investment Strategist Adam O'Dell, Green Zone Fortunes coder Charles Sizemore, myself. We're doing videos almost every day of the week just for you. We want to provide that safe, sound, smart, simple, profitable investment information just for you. We've also created a new membership program on our channel that gives you exclusive cannabis market information as well as stocks, interviews, and news. And I encourage you to do that. If you're on YouTube, just click the join button down below and you can find out more about that. If you're listening to this as an audio podcast, just go to our YouTube page, youtube.com, type in Money and Markets in the search bar. We've got the green Bull and Bear logo. You'll find us, click that. Make sure you're subscribed, click that notification bell, and you get notified each and every time we put out a new video. Also, check out our website, moneyandmarkets.com, each and every day. It's where we provide all that safe, sound, smart, simple, profitable investment information for your portfolio. We work hard every day, including the weekends, to provide you with the best information to bolster your portfolio. When we check out that website, sign up for our free daily e-letter. You'll get all that information sent to your inbox every day for free. Now, when we go on to today's podcast today, I'm going to cover a couple of things. One, I'm going to talk about a recent trend that I've noticed related to value and growth stocks, and then I'm going to go over our recent YouTube poll. I was off last week, so I didn't have an opportunity to go through all the poll information, but I'm going to go over our most recent poll here in just a bit. But first, I want to talk about this trend that I've spotted that I think is something you want to pay attention to as an investor. Now, since November, value stocks have had a really good run. And why wouldn't they? You understand that value stocks are the ones that have very low price-to ratios. Their PDE ratio, price-to-book, price-to-cash flow are all usually pretty low. In fact, in some instances, they're lower than their industry average. They also have solid fundamentals, which means their books look very good, and it makes them ripe for the picking when investors have seen things like enormous stimulus spending, as we've seen by the government, that could lead to inflation. This is commonly referred to in investing circles as a reflation trade, not a reflection trade, a reflation trade. This is where investors favor value over growth stocks and cyclical stocks over defensive stocks because investors are betting on a return of inflation. They're betting that inflation is going to get higher, so they put their money into value. Interest rates also play a role in helping investors decide what to invest in. And there's been a big narrative this year about the correlation between interest rates and growth and value stocks. Now, let me first show you the 10-year Treasury rate. Now, this graph I'm going to show you here shows a very small time frame. This is going to go back to March of 2021 to right about a week ago. Interest rates hit their recent highs back in March. The interest rate, the maturity rate or interest rate for a 10-year Treasury was around 1.74%. And since then, those rates have been steadily falling to where they are right now. Right now, they're at about 1.32% as of this recording, so give or take. But the question now is how has that impacted growth and value stocks? Well, what I did is I want to make it very simple. So I compared the S&P 500 growth ETF, which trades on the ticker SPYG, and with the S&P 500 value ETF, which trades on the ticker SPYV. So SPYG for growth, SPYV for value. And this graph I'm showing you here, the red line indicates the SPYG or growth stocks. The SPYV or value stocks are the green line. And I use the same dates as I did with interest rates. So only going back to about March of 2021. And the story here is pretty telling. Since the recent high of interest rates in March, growth stocks have consistently outperformed value stocks. The separation is even greater if you factor in the recent Fed announcement in June that its monetary policy enacted during COVID-19 pandemic could be changed sooner rather than later. It could happen sooner than expected. And this would mean an increase in rates and possibly a drawdown into their buyback of treasuries. Now, from March to today, growth stocks have actually outperformed value stocks by more than 12%. And the reason is pretty simple, but I wanted to ask Adam O'Dell, our Chief Investment Strategist, to weigh in on this. And here's what he told me. He said, as rates go higher, the present value of future cash flows that growth companies will potentially generate are actually worth less. And the present value of cash flows that value companies are actually earning today are worth more. So investors who expect interest rates to continue higher are usually less willing to pay for high multiples of growth stocks, and they should be relatively more interested in buying value stocks. So interest rates go up, value stocks start to get a little bit more valuable. Interest rates go down, that value declines, and we start to see the cash flow, the future cash flows of growth companies get higher. So it kind of illustrates how interest rates can play a factor in the difference between whether an investor looks at a growth stock or whether they look at a value stock. But quite simply, like I said, as interest rates have fallen, investors have turned more towards growth stocks, which were already outperforming before COVID-19. Now, during COVID-19, it was all value stock. Before COVID-19, growth stocks were all the rage. This trend seems to suggest that growth stocks are now back in vogue, and I've got a way for you to capitalize on that. Now, there's a lot of ETFs out there that you can find that capitalize on growth and capitalize on various metrics. But what I found here is the Vanguard Growth ETF. It trades on the stock exchange under VUG. It invests in large cap growth stocks that have been on, and the ETF has actually been on a nice upward trajectory since May. As you can see from this chart here, since May 19th of 2021, the exchange traded fund has risen 15%. It's actually outperformed the S&P consistently over the last 12 months. So if you look at a day range, then you look at a 4-week range, which is a month, a 13-week range, and then a year range. Each one of those factors, this ETF has actually outperformed the S&P 500. Additionally, it comes with a dividend yield of about 0.56% or an indicated annual yield of about $1.62 per share. So that means for every share you invest, you can expect an annual yield of about $1.62. So another $1.62 will be given to you as a dividend. And that dividend will help protect your portfolio, even if conditions turn the other way and interest rates rise, pushing investors back into value stocks. So you're still going to get that dividend, which is going to be a nice little addition, even if the ETF falls a little bit in value. Now, so that's kind of my way of getting you to maybe take advantage of this new this reversing trend into growth stocks that we're seeing across the market. Now, I want to look at results from our latest YouTube poll. Last week, we asked if you were bullish on the second half of 2021. Now, as you know, we were already past the midway point of the year, and 73% of those people who answered said that, yes, you were bullish about the second half. And some of the comments were actually pretty interesting. Manny said, I think the second half of 2021 will be fine with pockets of downturns. Tech and biotech will lead the way. I think that's a very safe assumption. I think it's a very safe thing to say because, nothing ever moves upward straight constantly, especially in the stock market. There's always going to be market fluctuations. Christian said, economy's reopening, demand for just about everything is increasing. And that's right. I mean, we are seeing demand start to pick back up, which is nice because we're seeing a high cost of goods and services because demand was relatively low. Supply was actually pretty low, but now demand is increasing. Supply is starting to offset, and we're starting to see those prices of things like lumber and things like that start to go down, which is great, makes things a little more affordable. And Robert said, unemployment benefits ending, child tax credits equal more stimulus and supply chain shortage improvements. And that's accurate. Employment benefits are coming to an end. A lot of states are opting out early of the federal unemployment benefits that were enacted due to COVID-19. Child tax credits are working their way through, and we're seeing supply chain shortage improvements, as I talked about earlier, where supply is increasing to meet increasing demand. So I want to thank everyone who voted and commented on our poll, and I think Manny and the rest of you are certainly onto something. On Wednesday, despite falling just a little bit, the Dow Jones Industrial Average, the S&P 500, and the NASDAQ all remain close to their all-time highs. And leading the way, as Manny kind of alluded to here, were tech stocks. Apple, Amazon.com, Inc., they all extended their gains from earlier in the week. So this is all a good sign, especially if you look back at growth. These tech stocks are very high growth stocks. And I think we're starting to see that trend start to permeate a little bit more. So again, VUG was my recommendation for you. There's a lot of other ETFs out there. VUG just comes with a very nice dividend and has a great upward trajectory. And as you know, what we like to do here is buy high, sell higher. And that upward trajectory, upward momentum of VUG is well established established and has been for quite a bit now. So make sure you check out our YouTube channel. If you're listening to this as a podcast, head over to youtube.com, search Money and Markets. And we have the green bull and bear logo. Make sure you subscribe, get notified every time we post a new video. You can check out our new video series, Ask Adam Anything, where I get to sit down with Adam Odell and ask him anything that you ask, anything that you tell me to ask. I will ask him. So it's great. You can email those questions for that, or for maybe the marijuana market update or anything like that. You can email those questions to feedback@moneyandmarkets.com. Charles Sizemore, Green Zone Fortunes co-editor, also has a new video series called Investing with Charles. He gives you his take on different stocks, whether he thinks they're good investments for you. And then we've also got the marijuana market update, which I host each and every week. And our membership community on our channel gives you exclusive content related to the cannabis market. And I've got a few things I'm working on here that I'm going to add to either the marijuana market update and or our membership program that I think are going to be great if you're interested in investing in cannabis stocks or learning more about investing in cannabis stocks. But the membership program includes access to interviews, company breakdowns, advanced insight into our cannabis watch list, which is up double digits, by the way, which is great for cannabis stocks. And all that is on our YouTube channel. If you want to listen to the Bull and the Bear as a podcast, maybe you want to take it on your phone, take it on the road, you can do that on your favorite podcast syndicator like Apple Podcasts, Google Podcasts, Amazon, Spotify, iHeartRadio. There's a wealth of them out there. Just make sure you subscribe and get alerted every time we release a new podcast episode. Now, leave us a review or comment either on YouTube or your favorite podcast syndicator. I love looking at feedback. Love to hear what you have to say. Love to hear what your questions are and what your insights are into the market as well. If you have a question, particular stock or sector you'd like me to take a look at or like us to take a look at, then email us. You can do that, feedback@moneyandmarkets.com. We'll drop that email address down below on YouTube. And also head over to moneymarkets.com, sign up for our free daily e-letter. We give you safe, sound, smart, simple, profitable investment information for your portfolio. We've got a lot more coming up, including we'll have next week, we've got the marijuana market update, Ask Adam Anything. We've got more of the Bull and the Bear. So lots of stuff coming up. Make sure you check back on YouTube every day as we have stuff coming out all the time. Or sign up for get notifications, and you get notified every time we release a new video. Until then, this is Money Markets research analyst and host of the Bull and the Bear podcast, Matt Clark, wishing you all safe trading.